Thank you for watching. Prime Minister Mr. Narendra Modi will be making his first Independence Day speech in a couple of days. The Prime Minister has several major tasks aimed at overhauling the Indian economy, making it productive, vigorous, and above all, unleashing the animal spirits. Cronyism can corrode India. I think cronyism will corrode India. Cronyism will certainly be an extremely corrosive force that the Prime Minister will have to tackle. I'm here to make a couple of statements pertinent to cronyism and how it could derail India's economic future. I'm Ramachandran, otherwise known as Ramach. The Governor of the Reserve Bank of India, Dr. Raghuram Rajan, had made an emphatic statement on Monday, the 11th of August 2014, condemning cronyism. He's absolutely right. Cronyism is a potently destructive force that could derail India, destroy India's economy, and in the long term enfeeble it so much that we may actually have an enormous amount of contempt for the private sector. That could actually push us back into state ownership of assets, and that in turn would again start off or trigger a wave of disappointment. In the main, cronies are business people that extract advantages from the government, and these advantages are actually paid for by the commoners and other competing entrepreneurs. And they have access, privileged access to markets, market shares. And invariably, they work in such spaces where the economic competition is of a low intensity. Therefore, what happens is they have price-setting power. The second advantage that cronies have is in privileged access to capital. Capital comprises both borrowed money or debt and equity from shareholders. Cronies have privileged access to banking credit. The Prime Minister should take note that cronyism can derail India. Cronyism is corrosive, and its impact would be felt widely across the economy. They have privileged access to markets, market shares, and therefore to revenues and profits. Cronies ensure that they face as little competition as possible. This could be from domestic firms. They keep domestic firms out of the competitive framework. They're also non-tradables. Usually, cronies are the non-tradables where the threat of imports is also minimized. Even if cronies were there in a marketplace comprising tradables, they could erect such barriers to competition through legislative efforts. Cronies have an advantage in terms of revenues and profits. The bigger advantage that cronies have is in privileged access to capital. Capital comprises debt and equity. In the pricing of debt, we usually look at the benchmark cost of debt, which the Treasury or the government pays, plus a compensation for the credit risk of the borrower, which is usually known as a credit spread. Also have privileged access to credit from the banking sector, which means that very frequently banks overlook the credit quality of the borrower and they price the credit risk as low as possible, which means the lending rate to cronies is substantially lower. The cronies have access to banking credit at very low interest rates, primarily because the banks choose to overlook the credit risk of cronies for two reasons. One, a crony works in uncontested market spaces, therefore the threat to revenues and profits is underestimated on purpose. The second part is banks usually are owned by the government, or they're part owned by government. Therefore, the decision-making apparatus within banks is usually told or influenced to look at a crony's credit risk at a lower level than what it would be had the bank operated in a fiercely competitive market space. Therefore, the lending rate to cronies is usually low, very low. The third part is cronies have access to privileged equity too, very patient equity, and moreover, the equity investors in firms operated by cronies understand that somehow business cycles, the risk of business cycles, will not touch these firms. Therefore, on a risk-adjusted basis, the required rate on equity too is suppressed. It's set at a very low level. Therefore, crony firms have a much lower weighted average cost of capital, which means what? Many projects in an economy that are actually unviable would be invested with crony money because the denominator would be low, therefore the present value of future cash flows would be very high. Therefore, unviable projects are usually invested in by cronies. Cronies work within the economy with several advantages. Wealth is the present value of future cash flows, so we have the numerator, which is cash flows, and on the denominator we have weighted average cost of capital. On the numerator we have profits to the firm, and in the denominator I have weighted average cost of capital. Later they would show up to be unviable projects, and many of these projects would be abandoned halfway through, and that's what India has seen over the last 10 years. Many unviable projects were invested in by friends and cronies, and these projects are now stuck. Enormous sums of bank credit are stuck in these firms, and there's much frustration that the Reserve Bank of India has expressed in the recent past. That's not alone. When you have so much credit stuck with cronies, the banking sector would yet have to earn a normal rate of return that would pay for the cost of deposits. Therefore, viable projects could borrow or made to borrow at very high rates of return or interest rates. So there's a compensation that goes on within an economy. Cronies have access to privileged credit, privileged equity, and the very efficient, the very productive investors, entrepreneurs will have to pay higher rates of return, either on equity or on debt or on both, to compensate for the lower costs here. So the cost of capital to very productive firms is usually high, and the present value of their future cash flows would turn out to be low because they carry a bigger denominator. Let me repeat this. The weighted average cost of capital to crony firms is usually lower because of orchestrated flows of credit, flows of cheap credit, and orchestrated flows of equity. Therefore, the cost of credit and the cost of equity to very viable firms, to firms that are not associated with cronies, is usually very high. So the denominator for crony firms is very low. The denominator, weighted average cost of capital, for the non-crony set of firms is very high. Therefore, non-cronies would put away projects because they would be unviable based on a risk-adjusted cost of debt, risk-adjusted cost of equity, and a weighted average cost of debt and equity put together. Which is why India has a humongous flow of bank credit into a whole lot of crony firms, and these massive sums of bank credit are stuck. The banking sector euphemistically calls these things non-performing assets. But to start with, these assets wouldn't have performed at all. Let me show this here. The numerator, cash flows at time t, and I have the denominator, weighted average cost of capital. Cronies have multiple advantages. They have privileged cash flows because their market shares are secure. They face as little competition as possible. Their weighted average cost of capital is low because the cost of debt is low through orchestrated flows of banking credit, and patient equity from the privileged sector keeps required rates of return on equity low. Moreover, the business risk of crony firms is underestimated or understated. Therefore, cronies have an advantage. Projects belonging to crony firms would be found somehow viable. But what about the non-crony firms? They work in contested market spaces. Therefore, cash flows at time t would be inferior because they face competition. That's a fair marketplace. Moreover, because the society expects to get a fair average return on all debt, because non-cronies can somehow be seen to be people not wanted by society. They'll be paying a higher cost of credit, and the business risk that non-cronies face would also be higher. Therefore, the required rate of return on equity to non-crony firms would also be very high. In the main, what happens to non-crony firms is the numerator gets suppressed, the denominator gets inflated because there's greater credit risk associated with them. They are not cronies, and the business risk that a non-crony faces is also high. Therefore, the required rate of return on equity is also very high. So what happens is viable firms belonging to non-cronies are now orchestrated to look like non-viable or unviable firms. Therefore, they don't invest. But in the context of weighted average cost of capital, they face the worst. The banking sector will have to somehow compensate for the expected losses on loans given away to the crony sector. Therefore, non-cronies, who are otherwise very good for the economy, will have to pay a higher cost of credit. Non-crony firms do not have access to privileged credit. Because credit risk of non-crony firms will be correctly priced, they will be paying a higher cost of debt. Moreover, the lending sector will have to somehow recoup its losses that they expect or that it expects on loans given to cronies. The credit pricing for non-crony firms will be that much higher. The third part, crony firms work under political protection. Non-crony firms work with usual business cycle risk. Therefore, equity risk is going to be higher in non-crony sectors. So when you look at the three factors, an emaciated numerator for non-crony firms and an artificially inflated denominator. Inflated in the sense the weighted average cost of capital would be inflated. Therefore, what happens is most non-crony firms will put away making investments because they would be found unviable. This is exactly what the governor has had to state, that firms in India are becoming risk averse. Obviously, because until now, risk was never considered part of the economic framework to assess projects, because the future doesn't look too good. And that's exactly why I thought I should make a statement that cronyism has been very corrosive. Cronyism has been pretty corrosive. We've pretended that it hasn't been. We have chosen to look away, but now comes the time when India has to draw a line on the sand and state this far and no further.